Yes, your boy Crypto Blood, and welcome to another double spin. Today, man, Softbank seeks to avoid WeWork's liabilities with investments outside sources. Let's see if that happens. Really, Softbank is on the hook, man. And, you know, I've been saying it's going to be either between WeWork or Tesla that's going to prick this tech bubble. And, you know, the Wall Streets of the world, they consider WeWork a tech startup, or at least the valuation of it is perceived that way, which is insane. WeWork is really just a real estate play. It's a REIT play, you know, and nothing more, nothing less. It's been so inflated and pushed up and hyped behind Softbank. They have so many hundreds of billions of dollars, Softbank does, that they keep pushing the valuation up on WeWork and even other companies as well. But again, we're going to take a look at this, and I personally think that WeWork might be the pin that pricks the bubble. A lot of things can unfold from this as a domino effect. It's just not WeWork. It's the companies that they have under them. Meetup. I don't know if you guys know, Meetup was acquired or owned by WeWork. You've got WeWork schools. You've got all these cities around the country and even the world that have given subsidies to this company to allow them to, you know, be in their downtowns, in their metropolitans. So I think it's going to be a domino effect here that we witness, and it's going to be bigger than what is perceived from the surface, in my opinion. I put a tweet out yesterday talking about WeWork. I said too big to fail. Well, I certainly think so. We'll see what happens though, but I want you to see this Bloomberg video and also one from CNBC. And I have an article that I want to go over with you guys as well. So check this out, guys.
Investment powerhouse Softbank, the once high-flying startup, may run out of cash as soon as next month. Well, joining us now from Taipei is Tim Colpin, an authority on WeWork and a Bloomberg tech opinion columnist. Tim, what exactly are we looking at?
Well, right now, according to the reporting we've seen in the last 24 hours, WeWork's board is essentially weighing up two options. One is what would look like a SoftBank takeover of the company. They would buy into WeWork even deeper than they're already in and effectively have control of the company, probably even a majority of the company itself. An alternative offer that they're looking at, or an alternative idea, is more of a debt financing that is basically being led by JP Morgan, and they would, along with a lot of other investors, bring in new cash into the company. Either way, the deal that would come out would be new cash into the company, allowing WeWork to survive a little bit longer as they keep burning cash. And the way I view that is essentially buying time for whoever runs the company under the new management after Adam Neumann's been pushed out, to essentially dial back some of the spending and find their path to profitability so they can keep the company going as long as possible.
Tim, what exactly does this mean for other unicorns waiting to list? Is this, again, I ask you every couple of weeks, but does this have huge repercussions, or is it more of a WeWork story?
You know, it's both, and it's kind of a terrible answer to your question, but, you know, we're seeing a long period of time. The last few years, we've seen a lot of these unicorns go to market, as in listed, usually in the US. Uber, of course, is probably the most famous example. But most of them have not been profitable up until the time at which they've listed. And they've got to these crazy valuations because companies like Softbank has been funding them. They've been pouring more and more kerosene onto the fire, giving them money to burn, giving them a lot of cash that they can just keep spending without the need to be profitable. And if that comes to an end, and it looks like that certainly is, we're seeing a bit more rationality in the kind of startup ecosystem, that is not necessarily good for their moves to go to IPO. But then on the flip side, if we're going to see some kind of rationalism and a more focus on profit, then as they do come to IPO, other unicorns come to an IPO level, they may actually have better chances being a good debut and getting a wrap up of this approach very quickly.
Tim, we only have about 40 seconds left here. You laid out two scenarios. The SoftBank takeover scenario. What is SoftBank's track record in taking over a company? I think back to Sprint. That hasn't necessarily worked out so well for SoftBank.
Yeah, if I was an investor in the Vision Fund, put it this way, I wouldn't be keen on seeing the Vision Fund taking over any of the portfolio companies, especially WeWork.
And more out of Reuters about this situation. It says Softbank seeks to avoid WeWork liabilities with new investment sources. Softbank Group, it says, is attempting to become the majority owner of WeWork without assuming the onerous lease obligations of the U.S. office space sharing firm, according to people familiar with the matter. It goes on to say that Softbank is offering a $5 billion financing lifeline that the company is assessing against a proposal by JP Morgan Chase, who, if you guys don't know, is another investor in this WeWork hot mess, for a debt package of similar size from banks and institutional investors. WeWork could run out of cash as early as next month without new financing, sources have said, after the company pulled plans in September for its initial public offering. And essentially, guys, you know, most of these IPOs nowadays, especially in the tech space, it's just a bait and switch. It's just handing over the liabilities to the public, allowing you to take and carry that risk, and while they cash out on it from the IPO. It's just a sad thing that we're seeing here, and this is crony capitalism at its finest, and something has to change, and I think it will. The article goes on to say it abandoned the IPO when investors questioned its large losses, the sustainability of its business model, and the way WeWork was being run by its co-founder and former CEO, Adam Neumann. It goes on to say Softbank and its $100 billion vision fund own about a third of WeWork through previous investments, totaling about $10.6 billion. And the tragic part of this whole situation are the workers at WeWork, no pun intended, but they're looking at facing over 2,000 layoffs from this whole debacle. And guess what? No one at the top ever gets any liability for this. No one goes to jail. No one gets fined. Nothing. They allow these companies to continue, and it really should really fall on Softbank, in my opinion. You know, with them continuing these raises, these funding rounds that basically bump up the valuation of WeWork out of nowhere, out of thin air. This stuff should not be legal. It says WeWork is seeking to slow down its expansion, reducing the number of new property leases it is taking on. The board has also agreed to a cost-cutting plan that includes layoffs, two of the sources said, without disclosing further details. I've heard 2,000 employees, over 2,000 employees. The job cuts, it says, in the United States could come in the first week of November, one of the sources said. There are also expected to be job losses in other parts of the world, the source adds. So I personally think this is not even going to happen. I don't think they're going to get enough investors to float this into November. Personally, it's just going to, it's a bad situation for WeWork. It's a bad situation for the employees of WeWork, and it's all because of this perverted capitalistic society environment we live in now. And this is from Meetup, one of the companies acquired by WeWork, and they put this out on the 16th. It's not funny, but they put this out on the 16th saying that they're going to start charging $1 per RSVP. But it does say that, you know, there was some confusion about it. They're limiting this to a test group of a few hundred in the U.S. The payment option shared on social media, they say, will only apply to those organizers who are part of this test. We apologize that the language on this page caused alarm or confusion, they say. So they kind of backtrack on their initial announcement that they were charging $1 per RSVP just, I think, a day or two before that. Insane. So as you can see, Meetup was sheltered from that gravy train that WeWork was getting from Softbank, and now that that's cut off, now that they don't have that cash reserve, you know, they're suffering as well. They got to figure out a way to actually make money. It's insane that we're in this type of environment where companies can just run without even having a clue of how to make money and to be in the black. So at some point it has to stop. You can't keep funding an operation that does not make money. You know, it just does not work. I don't know what world we're in, but it's a bizarro one for sure. The last video is out of CNBC from Kara Swisher, who was on the Squawk Alley earlier this week, and she said that WeWork isn't economically viable, and I agree with her. Let's check it out.
Bank now reportedly seeking to take basically control of the We company through a financing package, a deal that would further sideline founder and former CEO Adam Neumann.
Sure.
Is this becoming an existential issue for SoftBank? Are they so eager to take control of this because if it blows up, they're on the hook for so much already?
If it blows up, it's going to blow up. I mean, this is the problem. You're going to see an exit of executives. Look, these executives created really beautiful spaces, and running it operationally is a bear. I would imagine running all these properties across the globe is not an easy plug-and-play kind of thing. And so they've got experienced executives who've done a very nice job at the product. It's just economically not viable. I think that's the question. And so I think you're going to see a much smaller entity, and there's lots of interesting competitors here. And again, is this a situation where SoftBank can roll everything up? And I don't think that's the case. I think it's very localized.
I love to get you and Scott Galloway together to see when your views match.
We agree.
He tweeted last night, the 2020 story will be a 50% plus decline in the value of privately traded unicorns.
Yeah, we talked about that in Pivot this week. That's his prediction for this week. And so a lot of these unicorns, he had gotten a big war with Jason Calacanis and Keith Rabois about this.
Is he right?
I'm with the Galloway on this one. I'm a big dog,
The 50 number?
He likes to make it a little bit.
That's why I'm asking.
I think the question is when they go out public. Some of these go out public, we'll see. We've got, I think Palantir's going public, Airbnb, and a number of others. And the question is, how well will they do? But I think, again, and as we've both been saying, math is critically important right now. Investors, especially with all the global especially now with Syria, nobody's going to want to be like high flying right now, and I think that's the mentality right now. And the question is, can SoftBank take this over when they've got so many other things they're doing? They have no operational experience. The only thing to do is shove money into this thing, and that's another question. They have enough to do that given their other commitments.
Well, we can talk about the reckoning from public markets and specifically equity investors where a company like WeWork is concerned. I mean, it's facing a cash crunch, right?
Yeah.
And so whether it's SoftBank coming to the rescue or whether it's JP Morgan managing to, do a debt raise and shore up the finances there, I wonder what happens if neither happens.
Cram downs. There's always someone. There's always someone with money. I mean, would you lend them money? I don't know. I wouldn't, but would you?
It's always on what terms, right?
Yeah, right. On what terms? And so, sure, there's always money, but it could be very onerous for the owners now, and everyone gets crammed down. I think that's the term. I'm not a technical person, but you know what I'm saying. It's just going to be someone will show up with money, and then it'll be terms, and then, and then the question is who gets.
Is the rest of the ecosystem at risk if SoftBank really has to take one in the shin, on the chin, whatever body part that really hurts to take one on?
Not necessarily. I mean, I think it's commitments to some of these. I've always thought they've over-capitalized a lot of these companies, and a lot of people in Silicon Valley share my view, is that these companies don't need this much capitalization. It's just that this giant came in with all this money, and so if you didn't take it, you didn't take it. I never thought. Most people don't think it's a good idea.
So there you have it. I think as well, I have to agree with Kara. SoftBank has given a lot of these startups way too much money. And this is what happened. We saw it in the ICO markets of the cryptocurrency boom in 2017. A lot of these companies raised too much money. The public gave them too much money. But in this case, SoftBank is giving a lot of these companies way too much money. And you see them expanding way too much and outside of what is rational. You guys let me know your thoughts about this situation. Will this be the Black Swan event that causes the next economic crisis? Very well could be. Let me know your thoughts and comments in the section below. It's your boy Crypto Blood. Thanks for tuning in to this double spin on this Saturday afternoon. I'm out of here, people. Holla.